Alright, so I wrote this tweet saying that I think I made my mind on buying shares of ULTY this week. I can't resist. I was supposed to buy some more shares of YieldMax, but now I kind of just made my mind on buying maybe more shares of YieldMax as well as ULTY on the side, or maybe all of the money I wanted to invest this week, I'll just throw it all into ULTY. By the way, I don't have any shares of ULTY right now, so this would be my first basically position build up into ULTY. I thought, why not just make a video and explain the reasons why I'm buying ULTY, and I'm sure that this could maybe help other people kind of understand the hype around ULTY, and maybe some people would learn more about how the fund works. Even though I covered that in other videos and a lot of people, like I'm sure on YouTube, also cover it, it's always cool to just share my own take and maybe say something in a different way that might help someone understand better or whatever. So alright, let's get into it. So why I'm buying ULTY? First of all, this is not financial advice. It's just me sharing my personal opinion and why I like ULTY and why I'm going to add it to my portfolio. I'm not telling people what to do. I know a lot of people love ULTY, but I know some people sometimes comment in my videos saying that it's stupid and it's dangerous. But I'm not telling anyone what to do. Just do what you want. Anyways, I just wanted to say thank you to the 1,637 people that are subscribed to me. I don't want to stay here for too long. I just want to go on this and say thank you to everyone, and I really appreciate your comments, the positive comments, and people that are throwing out some video ideas. I am taking notes of these, so don't worry, I have so much videos I'm working on. So anyways, very excited and thank you so much. So let's get into it. So why I am thinking of adding ULTY to my portfolio, or why I'll do it essentially. Basically for the sake of this own YouTube channel. I did so much research on ULTY, and while doing this research, first of all, I understood the fund better, the purpose of the fund. I watched those interviews with Jay. I also kind of learned a lot more about options, and now I understand a lot more how to generate income with calls and how they work with puts to lower the risk, and how they use the call spread strategies on other positions and tickers. So just by doing the research for the sake of this YouTube channel, I learned so much about ULTY that when you understand something, is it can go two ways. Either you understand it and you see it's bad, or the more you learn about it, the more you understand how good it is. And now it's just the more I read about ULTY, the more I understand what they're doing, and I look at their holdings and at their intraday trades. Personally, I trust the fund, and the more I want to invest into it. So yeah, so just for the sake of the YouTube channel, I understand better. I did my own research. So first of all, if we look at the distribution details, since ULTY went weekly, they've been very consistent, and currently my favorite YieldMax ETF is YieldMax, and this is my biggest holding from YieldMax, aside from my other cover call ETFs from other providers. I love YieldMax because it's an ETF that holds everything, and it allows you to capture growth because it holds a bunch of stocks from the US stock market that are high quality. By investing into YieldMax, you kind of get exposure to everything that YieldMax is doing, and since they have a bunch of tickers from the US stock market, if the US stock market is going up, you're going to get some appreciation into YieldMax as well as weekly distributions. But the problem with YieldMax is that it depends on the underlyings, and it depends on the market conditions of these underlyings. And currently the market condition for YieldMax has been good. The whole stock market is going up. The implied volatility of the market has been lower. If you've noticed the distributions from YieldMax, let me just show you that. So as we know, the distributions from YieldMax have been trending down. So on 6/13, it's 18 cents. Then after that, the next one, 14, 15, 15, 13. And now the estimates for the dividend this week, on the week of July 18, apparently it's going to pay around 10 to 11 cents. So it's been going down, and it's not because YieldMax is doing a bad job at trading, it's because the implied volatility of the market is lower, so they can't generate as much option premium, even though they're doing the same trading strategies and they're selling the same type of calls and whatever. They can't generate as much premium because the IV is lower on these single tickers. I made another video talking about that, but it's going to go back up because in July and August there's going to be a bunch of earnings, and there's probably going to have more news concerning the trade wars, or we're going to see more news. But regardless of the news in the headlines, all of the big earnings are coming up in July and August, and this should shake up the markets and help with implied volatility. And I'm sure that YieldMax will have higher distributions in the next few weeks or few months. I want to add some ULTY to have more consistency in my portfolio's income. Right now with my number of shares, I make between $160 Canadian to $250 plus a week, and it's $100 range, which I'm not complaining about. It's still a very good yield and a very good return. But if I add a little bit of ULTY, a little sprinkle of ULTY, if I can add a few dozen of dollars or $100 of fixed weekly income that I can basically calculate, and I know that every week I'll be receiving that $100 in maybe a range of, maybe I'll be receiving between 80 and 120, or between 90 and 110. You know, the ULTY is much more consistent, so I know what to expect week after week. Where YieldMax, for example, every single week, I'm just expecting that it's getting higher and higher. It's very dependent on the market conditions. So it's just for consistency and for boosting the yield of my portfolio in a more consistent way. Second point is the NAV erosion and their trading strategy. So as we know, the NAV has been very good. Let me show you that. So as you can see, like before it was pretty bad and it was bleeding, and then they switched to weekly and they added their collars strategies because Jay said in multiple interviews that they got burnt in the past where they were probably selling high risk calls to get a lot of premium on a single stock on inside of ULTY. That single stock dropped, which basically made the whole NAV of ULTY maybe drop 1 or 2% in a single day, which is a lot, just because of one ticker. So right now they have protective puts, so even though one of their underlying goes to zero, they are protected by buying those puts at a certain strike price that whatever they decide based on their strategy. Not only they generate you income, they're hedging on their tickers. I'll dive deeper into that inside this video quickly. If you compare the holdings of ULTY and the holdings of YieldMax, there are some similarities because, for example, ULTY holds MSTR, ULTY holds Hood, so Robinhood, and there's MSTY and there's HOOY from YieldMax as well. But if we look at the way they're trading Hood inside ULTY and the way they're trading Hood inside HOOY, it is pretty different, and they're managing the risk in a different way in ULTY in comparison to how they manage the risk in HOOY. So I'll show you guys that in the video. So just knowing those little, those little nuances and details just gives me more confidence. And I know that like ULTY seems like the goal of the fund is to generate income. And I think that they're aiming for 9 to 10 cents a week. And from what I'm seeing in their holdings, since they're writing calls and they have protective puts, they're kind of limiting their total gains. So I think that the goal of ULTY is really consistency more than generate as much as income as possible. So that is very cool. That's why I'm saying pretty much help boost the yield of your portfolio and generate consistent income as long as they keep doing what they're doing. Third point, obviously, I mean not obviously, but is transparency. So like I just had the holdings of ULTY open right now. But basically you can go on holdings here and you can download all of their holdings. And fun fact, fun story, one of my friends, he works in a bank and he told me that he got an options course. We'll be able to work and help like with the options part of that bank, whatever. And their teacher is actually an option trader, whatever, and he has a huge portfolio. And he talked to them about ULTY. And I was like, what? That is so cool, that even a guy that works in a bank, which is more like quote unquote old school, looks into ULTY. And he told me that the guy said that whatever he was doing is basically for the past months, he's just been going on ULTY's holdings, and he's been like basically like he's getting inspired from ULTY's holdings. So like this is very transparent, and they update this on a daily basis. So like as an option trader, you have the transparency, or just as an investor, like you don't have to know how to do all of these crazy option strategies, and you can just go here and actually look into them. You can ask, like if you have a friend that knows about options, you can please send him that and ask him to explain to you. And you can really, if you understand options, you can dive deep and you can really see on a daily basis what is ULTY doing. And you can even forecast the distributions if you really like keep track of the premiums they're collecting and things like that. You really have a lot of transparency with ULTY, and we see all of the calls and the protective puts they're placing. So it's very cool, and that's another reason why. And then another reason is for the collars. So obviously they are trading collars, a collar strategy on most of their positions, and they're not just doing covered calls. So this is reducing risk. And then another reason is, like I say, just dip my toes in ULTY, try to get a feel for it, see if I like it. Because it's not because everyone likes ULTY that I will like it. Like I was saying, like I don't want to do all this, I don't want to go on and look at high IV, high volume, high quality stocks that are bullish on a daily basis and sell calls and buy puts. That's what's cool about ULTY, is that they're doing that for you, and it's just like a plug and play solution. You give them your money, they collect the management fee, the expense ratio here of 1.24% and other fees 1.14. They're collecting that huge expense ratio. On the flip side of the coin, on a daily basis, they're trading for you, so you're basically giving them 1.15% of your gains in exchange for them to do all of this for you and generate consistent premium, which I feel like 99% of the people have no idea what they're doing. And in my case, I don't have time to learn and to look at the market 24/7 and trade. That's another reason why I want to get into ULTY, is just diversifying in my portfolio into like a really unique asset. I find it super interesting. So I just like the fact that you can just trust them, and they've been doing so well as of now with their trading. So as long as they keep doing what they're doing, they keep their managing fee, They pay us our option premiums and everyone is happy. Let me just explain to you what are collars and let's look at their holdings. So this is ULTY for July 15. So we select everything that's related to Robinhood. They are buying 2 puts, one at $90, one at $87. And they also hold Robinhood. Robinhood's closing price today was $99. They are buying 2 puts here, and they even show how much they're buying them for. At the same time, they're selling covered calls. They're selling calls here. So this is the collars strategy that they're doing. And this is the premium they're collecting, and this is how much they're paying for the protective puts. Protective puts have a little price, basically protects the holding. So Robinhood is $99, and I don't know what's their current average cost on Hood. Let's say their average cost was $95. Then if it goes down to $90, they would lose $5 per share. If it goes under $90, they have a put here, so they're allowed to sell 3,020 times 100 shares, 232k shares at $90. Even if it drops to $1, they are still allowed to sell them at $90. They paid this for the insurance. If it drops under $87, same thing. You can sell 434k shares at $87. So this is basically protecting them from the downside. And on the opposite side of the coin, they're collecting, this is all the premium that is worth right now, those calls. So I actually did a summary of that. So I checked their holdings yesterday and their holdings today. I'm not an options trader and I don't know much about options, but I've been learning so much recently. If you're interested, you can literally go on ULTY's page and look on a daily basis and extract their trades. And for fun, like, you can track them and you can see what's happening and how much premium they're collecting. This was yesterday. This was today. So today, those calls, they're worth around 1.2 million. While yesterday they were worth 1 million, so they're up maybe 200k. Yesterday those puts were worth 320k, and today the puts are worth 150k. So in total right now, if we look at today's closing price, they're up 1.2 million on options profit, and they're up 5.2 million on shares price. This is 5% of ULTY. It's just crazy. Like you can look at everyone saying on a daily basis, and you can see what they're doing. And they know what they're doing. They're bullish on Hood, and for now it's working. I don't know if they're gonna close the positions earlier. Like that really depends on how they're trading and how aggressive they are. If they want, they can close it now and collect $6.4 million in profit and pay that back to us as distributions, or they can let it keep going until the expiration of the options. And if Hood keeps going up, then those numbers are going to keep going up. And I just wanted to talk about what's collar options. So you have a stock price right here, which is Robinhood at $95, for example, and then they're selling a call here for $100, and they have a put here for $90, just to make it simple. When you buy a put, it's always cheaper than selling a call for most of the time. You're buying a put for $1. When you sell a call, you're collecting premium, so this call is going to collect you $3. In exchange for that $3 of premium, what is the net is 3 minus 1. You receive $3 of premium from the call, but you pay $1 for the insurance of the $90 put. So your net is going to be $2. So basically, if the stock price drops $2, you're at break even. You're basically making money inside a range, and that's what they're doing with most of their ULTY positions. And now if you compare that, for example, to Hood, and these are the holdings of Huy, for example. Huy, as you can see, everything is calls. So the thing about calls, if we go back to my image, it's going to be the same as here. It's just like you can have a call here for $100 that you're selling for $3. The net is going to be 3 because there's no insurance anymore. If the stock drops to 92, you're at break even because 92 plus 3 goes back to 95. The thing is, if the share price tanks and goes down to 85, you're stuck and you lose $10 per share. Then you collect the premium from the call. You're back at $88 per share. So 85 plus the $3 premium. So that's the thing, is there's no protection for the downside. And with Hood, they're trying to make as much money on the upside on Robinhood, and they're trying to collect as much money as possible. And that's why those single stock ETFs, the distributions are always higher. The distributions are higher, and the distributions are highly variable because every single month the stock price moves differently. The implied volatility is different. If 1 month Hood does very bad, you might lose a lot of share price on your holdings of Huy in exchange for some income, and you're going to get less income. You're going to get less income because the underlying did not go up and you didn't get the most money out of your calls. That's the biggest difference, and that's what I'm saying, is that ULTY trades Hood as well, but it's doing calls and puts, so it's doing collars, where Huy is fully calls, so Huy is 100% bullish, where this is also a bullish strategy, but it has protection for downside. And that's why I think that they're really trying to be conservative, and they're trying to be more consistent, and their goal is more to generate consistent income, where here their goal is to generate as much income as possible, have the biggest distributions as possible. Alright, so that was it for why I'm planning to buy some ULTY. So if you watched until now, thank you so much. Stay tuned. Like whenever I buy some shares of ULTY, I'll also make a video sharing how many shares I bought and how much income I'm supposed to receive, and I'll keep updating you guys on that ULTY position because there's been so much hype. A lot of people on my channel are coming from my ULTY videos. Like I kind of owe ULTY to buy some shares and keep track of them and document that on YouTube. So I'll make a video when I buy the shares and let you guys know how that goes. So yeah guys, until next time, take care.